So we're talking today about why, if you don't have gold, and I mean physical gold or physical silver, you better start doing it now because the US dollar, although Jay is Canadian, he can see sometimes clearer than Americans can how screwed up our dollar is. So Jay, welcome to the first initial program.
I'm happy to be here, Robert. It's good to see you.
Good seeing you. So yesterday I panicked. Gold pushed 2000 US. I don't know what it is in Canadian, in the loonie, but I think next stop is 5,000 for gold.
Okay.
And it may take another 5 years, but I think this here is a real gold coin. And the first one I ever bought was in 1972. I bought it in Hong Kong, and I paid $50 for this. And today it's $2,000 plus. And this also is a silver coin. This is real silver. I don't like fake money. And that's why this Vancouver Resource Investment Conference is important, because you come to hear about why, if you don't have gold, physical gold and silver, you should have some now. So welcome to the program, Jay.
I'm happy to be here, Robert. Looking forward to this.
How long have you been doing the VRIC?
The show itself is over 20 years at this point, 27 years, and I've been running it for the last 12 years. And so, as you know, the bulk of those 12 years have been a pretty bearish market for precious metals and a couple false starts along the way. And what I'm seeing today is what you're seeing. I think a lot of individuals are realizing they might be getting caught a bit flat-footed by having zero exposure to, historic money. But I feel a bit of a mission, like I feel driven at this conference, Robert, honestly, to communicate the importance of that, especially to people in the West, because as you know, culturally in the West, we're sold this story that gold is a pet rock, that it delivers no yield, it has no value, etc. And we hear this from people like the Oracle of Omaha, for example, right? Gold's a pet rock. Whereas a lot of countries in the East, civilians are encouraged to buy gold jewelry, to store wealth in gold. And we're sold an opposite story in the West. And I think it's going to catch a lot of people flat-footed.
But also, is the thing is, you are in the industry, and most Americans are not even close to the industry. Most Americans are into paper like bonds and the dollar, US dollar.
Right.
But right now, what Jay knows is there's massive movements of gold and silver moving to China and India. What's going on with these massive movements of gold, and what do you think the Chinese and Indians are up to, and Russians?
Yeah. I think that the fragile trust that we've had globally for the last 40 years has been shattered, and I don't think it's going to be repaired in my lifetime. And so countries like China, it's in their best interest to prove to the world that they have a stable, trustworthy currency. And the best way to do that is to fill your vault with gold, right? Something that we haven't, again, done in the West. And if you want to take, for example, if you're China and you want to go to the Saudis and say, we want to pay for oil in Chinese currency, the first thing the Saudis are going to say is, why should we trust Chinese currency? And if you have a vault full of gold, there's a lot more supporting that statement. Now, we've seen central bank gold purchases accelerate to a rate faster than they have in 50 years. So that should raise your eyebrows. That's physical gold being taken off the market. That's a massive event. You got to ask why, but more importantly, you got to ask what happens next. This is a finite resource. And we're not only seeing central bank purchasing, we're seeing central bank repatriation, which is to say countries that historically were comfortable storing their gold in London or New York now want it within their borders. Germany is a great example. It's a country who's historically stored their gold in New York, because Europe, it's a crowded continent, many countries, many nations, tight borders. It always descends into war as a consequence. That's the history of Europe. So Germany was more comfortable storing their gold offshore. But now when there's an actual hot war occurring in Europe, they're more comfortable with their gold within their borders. That's very telling about how they're seeing the future right now. Lots of volatility.
So and what's going on with China? I mean, the reason China's as you know, I started my first gold mine in China, and I took the company. It was called Mondoro Mining, and we took it public on the Toronto Stock Exchange, and we struck gold in China in Dalian province. And I found out what counterparty risk means and country risk means. And that's what most people don't understand about gold and silver, where it's stored, where God created gold and silver are in some of the most dangerous countries who really don't like America. So here I am. This is back, I forget now when it was, and long time ago. I took the company public on the Toronto Stock Exchange. And about 2 years later, we struck gold in China. And the Chinese came over and said, thank you very much, and took it. So I want you to know that I was a billionaire for about a couple of years. And then the Chinese took my gold mine, and it was tough, I mean, so a thing called counterparty risk or country risk. So it does seem like gold and silver and many of our precious resources are not held on what I would call friendly soil. Any comments on that?
No, I think that counterparty risk from a country standpoint is going to increase dramatically, because if we're departing a world where there was some kind of a fragile, but there was trust, fragile or not, and we're no longer operating that way, we're into a scenario where it's more every country for themselves, right? You can't rely on allies you used to be able to rely on to protect supply chains, et cetera. We're in an energy crisis. We're in a food crisis, right? We're very much in an every man for himself scenario, globally speaking. And so if you've got valuable deposits of resources within your borders and you can't trust the allies you used to be able to trust to protect your supply chains, then what's in your best interest? It's to take those resources and take that value for, I mean, even if they're squandered, and usually they are when resources are nationalized, they're not effectively produced. But I think geopolitical risk is way more significant than it was even 5 years ago.
Yeah.